Hello and welcome to ATFX's Jackson Hole preview. Where do we start off this week? It's been another really good week for risk and for equities. We kicked off on the front foot really nicely on Monday. US stocks again driving higher, and all really on the back of what we're going to be looking at today, which is expectations for strong Fed rate cuts, a cooling US economy, but not a crashing US economy. So that soft landing that we've been talking about for a long time. And the moves in the market have been quite strong, like especially across some of the commodities. I think you'd be living under a rock if you didn't know that gold's just hit 3 consecutive days of fresh all-time highs. And currencies have really taken off as well. But really, this Jackson Hole Symposium hosted by the Kansas City Fed on Friday has been used over the years as a bit of an indication of pivots from the Fed and from other central banks. And there's a couple of other central banks that we'll have a look at today. And then we'll just see where there's some potential moves in the market. So first of all, big take on where they're going to go. The market is still talking a 75% chance of a 25 basis point cut in September. But some of the moves that we've seen, US yields, the dollar, stock markets have been reacting more like we're going to get that 50 basis point that investors were talking about only a few weeks ago when we got that big crash. So there's a lot of consternation in the market, I would say, on whether things have just become slightly overdone. So bringing up the euro chart, and you know, this is a really good example of what we've seen this month, and it reflects a lot of what we've seen in the currencies. This is the dip that we saw on that sort of crash Monday, whatever we want to call it, when stocks really took a beating, the dollar appreciated. And then ever since there, we've had a really good recovery. And look, you can see this like in 1 day move, we've gone from sub 108 back up to 109.20, which is kind of a comfortable level for the euro. And since then, it's been choppy, but it has been, you know, a clear trend to the top side in euro, and it's downside for the dollar. Now, we might have to take the yen out of the equation because that has been choppy. But for the rest of the majors, we have hit multi-month highs. We're on an 8-month low for the dollar at the moment. And there are trading opportunities for this. So as you can see, I've kept in the resistance trend line, which broke through really nicely. That 110.40, it kind of was a nice easy trade to take us up 70 or 80 points. And that's what we're going to be looking at. So if we do see a more conservative outlook and a slightly more dovish outlook from the Fed Chair Jerome Powell on Friday in Jackson Hole, we could see some sharp appreciation in the dollar. First stop on the way down is going to be at the break of that initial resistance, which is that 110.40. The high here was sort of 110.47, so you're looking about 110. And then a breakdown through here does open a way for a move back to 109.20. And I feel if he does lock in that 25 and in his own inimitable way, let's be honest, then I think we could see some moves to retrace back to these levels, which some are considering fair value, because on a daily basis, we've been seeing large percentage drops in the dollar. One of the other currencies we have been focusing on, especially over here in Australia, of course, is the Aussie dollar. It is sitting at a very nice level for traders, and if it can remain around these levels, then the opportunities are obviously quite clear. This is the daily chart. We've hit this long-term resistance, and it's struggled to get above here, as you can see. Earlier in the year, we're around about 67.50, just underneath there. A more conservative Fed chair, talking more and you know, maybe slightly more dovish, would bring the Aussie back down 66 the figure, or 66.06 at the moment. It's probably the first port of call. And then there's a stretch all the way down to that low that we saw once again on that crash Monday, around about 63.50. Conversely, of course, if we do get a more hawkish Jerome Powell, who is going to confirm rate cuts and is then going to encourage the market to think that we're going to get faster and harder rate cuts into the end of the year, then we do see a break higher. It does challenge up to this 69 level. And then, you know, then I suppose for many, the sky's the limit. The sky could be just 71 cents. If we are going to enter a very aggressive cutting cycle from the Fed, I don't think we're going to see that, because they're still looking at data. This brings us back to something else that we're going to be looking at very, very closely at Jackson Hole, is how the Fed's looking at jobs data. We know inflation is obviously the number one consideration, and we still have PCE data to come, another CPI print, and some very big jobs data before we hit that next Fed meeting in September. They're all going to have a part to play. So what we get from Jerome Powell, if he tells us that he's looking at data, that non-farms when it comes out in a couple of weeks' time, that PCE number and the CPI, they're going to have a major play. They're going to be big risk trading events. It's going to be very interesting to see what Jerome Powell says about the job market. And once again, it's dealing with the nuances of central bankers and when they speak. If he does give that little bit of extra impetus and, I suppose, focus on those non-farm payrolls, then that's going to be a massive print when we come through to it. We have seen jobs data coming off. A surprise topside one could really spoil the party for a lot of investors, stocks topside. I'll now just take us over to our sterling chart as well. So also occurring in Jackson Hole, we've got Bank of England Governor Andrew Bailey talking. Slightly different situation for the Fed, but we're looking for cuts from them as well. But there's still some data that's a little bit sticky in the UK. But when you speak to people in the square mile, not totally convinced we're going to see easing as quick as the Fed, which could open up some sort of topside moves, which we've seen already for the cable. But once again, what we're looking for Andrew Bailey is some forward guidance on rate cuts. We have seen a great move to the top side in cable. And as you can see here, like real decent big figures in it, 126.60-ish. And we've topped out. We did get a breakthrough of the trend line resistance, but we've talked out very close to that July high, 130.50-ish. And we're sitting just beneath that at the moment. If markets are trading around these levels as we come into Jackson Hole, there are great opportunities for trading. Obviously, a more hawkish bank, and traders would love from both central banks, right? Indications of one way or the other, but you get more hawkish Bank of England and like the dream scenario with a more dovish Fed, and then cable does take off, and then you're looking for levels not seen for a couple of years, and then we really do open up and move back up to the mid 130s for cable. So plenty going on. ECB are always are there as well. I think Philip Lane's speaking in Jackson Hole, so we could see some movements in the euro. But I think the main take for most traders this week is, without a doubt, Jackson Hole is being tallied as the most influential mover. It is going to come down to nuances on what we hear from those central bankers, what we hear from Jerome Powell, what we hear from Andrew Bailey, and also, of course, what we hear from Philip Lane and a whole host of other people that are there. I think the most important thing is for traders to keep a very close eye on what goes on from Jackson Hole. And longer term trades and longer term portfolios will be influenced by what we get from the Fed Chair. So exciting times ahead. Probably going to see some more range bound markets ahead of this Jackson Hole, and obviously we've got the Fed meeting tonight. Might see a little bit of consolidation, but you've got to trade what you see in these markets. So good luck out there, and thanks for joining us.